this is Maggie Vo. I'm the managing general partners and chief investment officer of Fuel Venture Capital. Fuel Venture Capital is a venture capital fund based in Coconut Grove in Miami. We invest in mid stage from early to late stage technology companies. And I'm very happy to be here on IV podcast to have a conversation and share my experience.
That's great, Maggie. Thanks so much for making time join us on the Heavy Podcast. Before we talk about Fuel Capital and everything you're currently doing, give us a thumbnail version of your career to date.
So my career, I started my career in fund management business. I always know that I love to be in investment and in fund management business. So when I started, I make a goal that I want to work for different funds so that I can learn about different asset class. So because of that, I has moved from, public market fund and then real estate fund. And right before joining Fuel Venture Capital, I was a hedge fund manager managing a global long short equity strategy. And the main reason I'm doing that is, being in America, I understand that every investor, they build a diversified portfolio. And the best way for me to advise them in terms of investment strategy, I need to understand different asset classes. And then about 3 years ago, I made the move from the public market to join the private market. The main reason is when I work with my clients, they pushing me to go into the private market so that I can find the access to the unique opportunity for them, especially at the early stage, because they notice that a lot of technology company these days they no longer join the public market like Amazon back in 1990 something when it was only like 3 years old and the valuation is only 300 million valuation. Nowadays you have company like Facebook, Uber, who decide to join the public market when they were already 10 years old and valuation is billion valuation. So a lot of my investors they realize that most of the value creation is in the private market. So they want me to join the private market to help them to get access to those investment opportunities. And that's explain why I'm here today at Fuel Venture Capital and doing what I'm supposed to do.
Well, that's super exciting, very diverse background, and I appreciate you sharing that with us. So, in terms of your current role as a chief investment officer and as a partner within the venture capital firm, give us an overview of what your average day looks like. What falls under your purview, what falls under your area of responsibility, and more importantly, out of the majority of time that you spend on, how much of that do you actually want to spend on?
One thing I think very kind of like fascinated me about the role I'm doing right now is um, every day is different. You don't have the same day. So it's really hard for me to tell you like what is the average day look like. But I normally will come in, and want to check, my email, following up with, email from investor and founders. And then I will sit there with my investment team as a chief investment officer. I want to make sure that I understand what my analyst and my associate is working on. And that is how I roll my days. And it's depend, right? I mean, we headquarter in Coconut Grove, Miami. And as the economy start opening, we have a lot of visitor. We have investor from all over the place, from Latin America, from Europe and Israel. So I will get some visit from my investor who want to have a review on the portfolio, understand about what the portfolio companies are doing and see how they can help them. So that will be majority in the morning. I try to set up, meeting in the morning. And then during lunchtime, trying to take advantage of the tech movement in Miami right now. As you can see that a lot of people moving down here from founder perspective to like a lot of VC moving down here. I try to build my syndicate group. So over lunchtime, I normally will spend some time with other VC team just to kind of like get to know each other and building the network. And coming back from lunch, normally I try to spend, in the afternoon with founders, either sitting on the board meeting, for the companies that I'm on the board, or working on certain project with, a portfolio companies that trying to, do certain thing like improve certain metrics or build financial models or talking about a new fundraising. So I spend the afternoon with the founders and, closer to about 3 to later in the afternoon, I will go back and spend, time with my team internal meeting, making sure that we review our deal flows, or, working on investment memo on any companies that, we currently work, performing the due diligence on. So that's how the day look.
Yeah, that's very interesting. And I agree with you with angel investing and venture capital. It's never the same day every day. It's a lot of moving parts. So it can definitely relate to what you're dealing with just in general. So with those that are not so intimately familiar with the different roles in venture capital, I realize the structure of every venture firm is different to a certain extent. As a chief investment officer, tell us a little bit more about the what actually falls under your area of responsibility, as as the functional role versus the investor or the general partner, or the associates that you have, or even as a chief financial officer. Just give us a little bit of a overview from that perspective.
So my background is in math and finance, and I also have my CFA designation, which is, the most respected designation in the financial industry. And obviously, when I share with you that I have a background in math, finance, and CFA, you know that majority of my responsibility is in investment, in number oriented. Basically my main responsibility at beginning, when we start the fund, is to identify investment opportunity and performing due diligence on the opportunities. The way it's breakdown in the fund is we have the analysts and the associate to screen and scrub deals. Means that we have a couple checkpoint for them to go through, because as you know, performing due diligence take a lot of time, and I don't want me spending so much time performing expensive research and analysis, and then you decide that unless there's some real red flag, you decide that you don't want to invest. So that's waste a lot of time. So at my team, the way it works is I have my analyst team to do we call a first pass analysis. It's a preliminary due diligence, making sure that on the box is checked, like the market is growing or not, or how's the team looking, how's the business model, etc. And then if the company pass the first pass analysis, that's when they push it into my team, which is I'm responsible mainly for doing the deep dive due diligence. The way I always describe is for the analyst to accumulate information. That's basically the stage that whatever the founders say to you, you take it for a fact and assume that they're saying the right thing. And then when it's come to me, I'm basically doing the validating the fact. So a lot of time people will tell you that they're in $1 billion market size. And then after due diligence, you figure out that, oh no, you're actually in a niche market. Or when they give you the financial model, they will build with their bias. They're optimistic that, this is a great business model or great market. And then I have to like redone all of the models. And, and moving from that, I will look at the deal term, try to understand the valuation, perform the valuation analysis, because, at Fuel, we believe that the thing affecting, the return for our investor is two things. One is the valuation numbers and the term. So I'm responsible for that fact too.
Yeah, that's very interesting, and definitely seems like there's a specific structure to this in terms of the actual area of responsibility. So that's pretty exciting. So moving on a little bit, you talked about evaluating founders, which we know it's one of the critical components of every formula as you evaluate every company you decide to invest in. Tell us a little bit more about your thesis, or just in general your approach to looking at the early indicators when you evaluate the founders, starting from the very first meeting to how you progress. Give us a little bit more of a insider look. How does that process look like? What do you look for? Would love to get your thoughts from that perspective.
Thank you. That's a great question. So the way I look at founders, normally we will meet founder after the company passed the first pass analysis, because I want to know, to interact with founders. I normally really like to meet them in person, and I look at the founder analysis from three different aspects. The first one is I try to determine if the founders have any unfair competitive advantage. And when I say unfair competitive advantage, means that they need to prove it to me why they're the person building this specific company instead of, the next person that I'm meeting with. And that unfair competitive advantage normally being demonstrated by maybe, their background, their working experience, or maybe their, what they studying at school. And what I want to figure out is this passion is not just one day they wake up and they come up with a nice idea and let's try to build a company. I want is a long-term passion that they have been nurtured, they have been educated themselves, and because of that they have some unfair competitive advantage, like the insight about the problem, the insight about the solution to solve the problem. On the other hand, they have, the network, because as you know, one of the problem for company is to get the first customer. And if they have the network in that verticals because of their background, that will be easier for the company to approach the first customer. So that's, the first thing I look at. For example, my tax file portfolio companies, the founder is the CPA working for PricewaterhouseCoopers. So it's very easy and understandable that, he want to build a startup company in the tax accounting industry. So that's the number one. And the number two is all about, the want factor, which is more like the attitude, the resilience, how passionate you are, and how energetic you are about the problem. Because as you know, right, I mean, life in startup is not just like a one straight line going up, it's going down and it's going sideways. So I think that the main thing to keep the founder keep bounce back from failure is they have to have the passion, they have to have the energy. And obviously the last one, the last aspect, the most important thing is they need to be able to show me the ability to execute. Like for example, one thing I want to see the founder have ability to sell. Why I'm saying that? Because first, if he believes in something and if he doesn't know how to articulate to sell his belief, it's already a failure, because he needs to attract more people to join his team. He needs to attract an investor to join his cap table. That's before even, trying to convince customer to buy the product. So I really want to see that he's had the ability to execute, to sell the product, and to build a product.
So, and thank you for that. The ability to execute, I agree, is it's extremely important. Also, take that a little bit further, ability to recruit, because at the end of the day, even if you have a co-founder or a couple of co-founders, you're gonna need to convince, recruit, and hire some, exceptional engineers, exceptional salespeople, whatever the case may be. Surround yourself, surround your startup with, the top performers. So for the founders, especially first-time founders, they oftentimes, I notice, overlook that very important component, the ability to recruit and really build a team that, as you grow and scale. What are some of the recommendations you have when you work with your portfolio companies when it comes to staffing, recruiting, and overall talent acquisition? Because as a startup, you don't have a brand name, you don't have that much of attraction, you don't have a lot to offer except for some compensation of the package for the particular employee, equity included. What other recommendations that you provide to your founders when it comes to effective hiring strategies?
Yeah, I think, people have tendency to like people who are similar to them. Or even when you try to find the founders, you normally want to hit up your college roommate, because they probably study the same major, understand about the same thing. But I do think I look at things a little bit opposite. I want to find the founders, or I want to find the people joining the team are totally opposite to me. So for example, at Fuel Venture Capital, we manage the fund. I have the founding partner who is Jeff Ransdell, and he and I work so well together because we complement to each other and because we opposite, right? So let's say that I'm more number crunching and go deep dive into bottom up. He will be more like a top-down person. He will be very good at upfront talking to investor, fundraising, and sharing the top, the big picture, the vision. So when investors come to us, they look at us kind of like the two balance each other. You listen to the story first, and then you look at the number to make sure that it's verified the story. So the same with the, founders. They need to find someone who can complement them, who totally different from them. If you like, if you are tech founders, you don't want to find out the tech founders, because when I look at the companies, the founding team, I want to see the dynamic. I want to see someone so good at selling, like fundraising, or someone will be, very good at the technology to build a product. So don't, hesitate to hire someone totally different from you. And normally they will be the one that who can remove a lot of stress from your life.
No, those are great recommendations. I can definitely relate on many levels. As a fund, do you guys, are you industry agnostic, or do you have particular specialization that you guys like to focus when you evaluate certain companies for investments?
So, we have our first flagship fund, and the way we look at things is, because I'm coming from the background of, hedge fund risk management. So I'm very focused on portfolio allocation. So for the flagship fund, we go wide instead of going deep. And going wide have the benefit is diversification. So right now for the flagship fund, we have, 8 different focus. We have big position in fintech, we have big data, we have IoT, robotic, and AI. So basically, we want to invest in one of the transformative technology. And the reason we go wide instead of going deep is, at the beginning, when you invest in startup, the one thing different from public investing and private investing is the amount of knowledge that you have. You can try to do a lot of due diligence, but keep in mind that startup will pivot, will changing. So you want to invest and then accumulate more information, build relationship with founders. So that's why we go in wide, so that the diversification protecting us, non-companies can just bring us down. But then further, as we grow Fuel Venture Capital, the second fund right now we're raising is more sector focus. We have a fintech focus. And the main reason we're doing that is we move from the flagship with 25 companies. Now we go into the fintech focus with only 5 companies. And the way I explain to my investor is the knowledge risk now is reduced, because most of the company in the fintech sector focus is from our flagship, and we have been build relationship with the founders. We understand the business. Now they go into the stage that they need growth capital, and obviously they are the winner, so you want to keep funding the capital. But because the knowledge risk going down, it's allow you to take different risks. So we take concentration risks. So in the fintech sector focus, we only have 5 companies, but we double down on the 5 that we believe that it will be successful.
Right. No, that's very interesting, and I've been studying that a lot. The whether to select a niche and specialize as a thesis from investment perspective, or keep more of a generalist approach, because there's always that balancing act. There's all the advantages and disadvantages, but I love your perspective on that. So that's very interesting. So when you evaluate, I'm pretty sure you study different trends, industries, ideas on daily basis. What ideas that really excite you these days? What are the different trends that you're very passionate about, that you kind of you're very bullish on, in terms of whether that's your particular area of investment or just in general?
Right now, as I mentioned earlier, the reason that we raised the second fund and focus on fintech, it should sending you some signal that I'm very interested in fintech. And in the second fund, the way we do things is, we try to benefit from that trend all over the world, not just in the US. Because, for example, in some developed countries like US and UK, we invest in B2C fintech companies and B2B. In the Nordic region, last week we just entered a challenger bank with a monopolistic characteristic. So that is, we build a position in the Nordic region. And then in Latin America, or in general emerging market, actually from Vietnam, where I'm coming from, now there's a trend that in emerging market they move from cash and they go straight to the mobile payment. They skip the whole credit card, stage, which is very interesting. And most of the emerging market, they benefit from the new technology and they adopt it very fast. So I just love the fact that when I invested in fintech, the vertical is very broad. You can go from insure tech, you can go from real estate tech, and with the the growth of the fintech since 2000, I would say 2008, after the financial crisis. Nowadays, you have so many fintech companies, and they really focus on building the infrastructure and provide the vertical as like infrastructure as a service, which allow the other fintech company to grow faster. So nowadays, you look at any companies, they can turn themselves into a fintech. Doesn't matter if they are marketplace, doesn't matter if they are e-commerce. They will figure out somehow to sell and generate revenue from the fintech perspective, and which I find is a very optimistic trend.
Right. No, that's very interesting. I can definitely agree with you from the fintech perspective. There's a lot of opportunity and a lot of unscratched surface when it comes to solutions that could be developed to improve that overall industry. One thing that I want to also point out is something that I've been very passionate about when it comes to investment thesis is not really a trend, but part of a formula that I love to subscribe to is investment into immigrants and surrounding, the kind of my investment syndicate with fellow immigrants, those that had, come from, other parts of the world here to US, had certain success and now looking, for ways to pay forward. And, it's definitely not a knock on anything for those that are born here, but it's just I'm able to connect on more levels with other immigrants from a perspective of just being very scrappy and in a sense finding creative ways to succeed with limited resources. So I think that resonates a lot with some of the founders that I'm backing. So that's very interesting from just the overall as we talk about trends.
I'm so glad that you mentioned it because I'm an immigrant too, and I think there's so many things to talk about immigrant, coming to the U.S. And try to provide a disruptive solution, and with their very strong, work ethics. And going back to piggyback on what you just say, right? Immigrant coming here with nothing, so they really know how to learn how to do less. With less but doing more things. And I think that is a very important characteristic to have in startup, because that at the point you have very limited resource, not just from capital standpoint, but from the human power too. So you really need know how to capitalize, the resource that you have.
Right. No, I love that. We could probably talk the rest of the podcast about this particular topic, but quite a few other areas I want to cover with you, which are very interesting to me from a standpoint of a value add investor, because we hear that a lot. I've been, on both sides as a founder operator, as an investor, and there's different perspectives when it comes to, one side providing the value, the other side seeking value, but at the same time, just the overall premise that I love to subscribe to is as a founder operator, the ball is in your court to derive the value that you want to derive from the investor, and not necessarily for an investor to make that first step. So just curious to get your thoughts on the overall concept of a value add investor. How do you approach this, and actually how do you provide value to your founders that you back, aside from the financial support and capital investment?
Yeah, that's actually that's a great question. Thank you for that. At the beginning, when we start the partnership with any founders, we always emphasize that we an active investor. We're not passive investor. Means that we're not just giving you the money and then let you do whatever you want and then come back later and ask for more. So we're pretty involved, and that's the reason I would love for you to come to our headquarters. The way we build here is we don't want just to be a venture capital fund. We build an ecosystem here from idea to exit. We realize that company go through different stages. They need different help, and that's why, as the name is Fuel Venture Capital, we built surrounded us with different fuel station. So we have a talent station. We have, a team to help, our portfolio companies when they're scaling and need to hire new people, they can work with our talent station. And as you already work with our PR station, sales and marketing, I think that is one of our strongest fuel station, because a lot of our company is in, the Series A, Series B. When they start scaling, you want to make sure that the name of the company is out there to gain, to have like brand enhancement, or to get well known and trusted. So a lot of our portfolio companies actually working with our PR, our marketing station. And if you follow us on Instagram, you see that they're on the news, either Wall Street or TechCrunch Business Insider. So that's one station. We have the tech station, technology station, I'm the finance person. My partners is finance too. So we work with different tech team all over the world in Asia, Latin America, making sure that if the portfolio company needs some support, we can provide to them. And then go from there. You kind of like seeing what we're trying to build around here is an ecosystem. And recently we add something called a SPAC station. Given the trend in the SPAC market, we think that it's very smart for us to keep an eye on the trend. And we have, a good pipeline organic of portfolio companies, which, doing so well. So we want to make sure that we understand the SPAC very well, because that is a way for those companies to exit. So we add the SPAC station to our ecosystem also.
I love that. I love the whole concept of stations and being able to select and laser focus on certain areas where the founders really need help and bring that expertise and, just at the end of the day, provide those resources, which, that's exceptional. I think a lot of venture capital firms should, follow very, somewhat of a similar structure. So that's very interesting. When, from your personal standpoint, what are the different sources that you utilize on a daily basis as part of your content diet? What do you consume for learning to stay in ahead of the curve? Share with us the sources that you consume on a daily basis.
I think that, with the technology nowadays, it's democratized everything. People can find information, everywhere. So it's not about, a secret sauce that I have, and you don't have, but it's more like how you read it and bring it together and apply it and turn it into your knowledge. But then obviously, I read PitchBook and CB Insight a lot, and McKinsey too, because I want to stay on top of the industry trend. And they normally have a lot of like good piece just focus on one technology in general and keeping me informed, the fundraising, the capital that particular sector attracting from VC. From the news standpoint, I'm sure that everybody reading TechCrunch and Crunchbase just to keep an eye on, what's going on in the VC. And then I subscribe to, blog of one of the well-known venture capitalists, just like, for example, Anderson Harwood, Sequoia, First Round Review, Bessemer Venture Partners, just to kind of like, I like to learn from different aspects, how people view things. And then the way I always describe is you digest on the information, you bring it back, you put your style on it, and then you try to put a creative hat on it to benefit you.
Right, 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 right. No, I love that. So those, with so much information being thrown at us from all different angles, I love discussing the strategies, how to be very selective when it comes to exposing your mind and creating your own little bubbles. So that's, not only from the learning perspective, but just in general, I think that's very interesting. So I can't help but ask also your thoughts on, and by no means don't take this as a investment advice or anything from that perspective, on the overall trend of cryptocurrency, especially, lately, all of the waves that it's been riding, and with the big Miami Bitcoin conference that just happened. Just share with us your thoughts in general. What are you seeing there? Anything interesting that you've been researching?
So, in terms of crypto world, I'm going to be, very honest. I think that I'm more on the conservative side. The main reason because I came from the public market, as I mentioned with you, and in the public market, the way I invest is I only invest in things I know the drivers. So I always tell people that, okay, if you invest in the US dollar, probably because you believe that the US economy is doing well. Or if you invest in Apple stock because you believe that they're going to launch some products, or improve their earnings, or even startup, right? I invest because I believe that the startup come up with a disrupted solution to solve certain problem. The problem I have right now, making me a little bit hesitate to go into cryptocurrency from the investing standpoint, is I don't know what is the drivers. Let's just say one day I wake up and somebody's saying something and bringing the whole market down, and I feel a little bit crazy to be at the mercy of the people saying that. But on the other hand, I really have a strong interest in the blockchain, which is the technology, behind the cryptocurrency. I think that blockchain provide the ability for us to record information in a way that is make it very difficult to change or to hack or to cheat the system. And I can see so many use case using blockchain from like banking, stock trading, you know, real estate, land title, etc. And in fact, right now, I am performing a due diligence on a company using blockchain to democratize the trading, the investment in the private market.
Oh, that's interesting, and I can definitely respect the fact from just the from conservative side because it's something that's completely new. It's very disruptive, and it's going to be interesting how things play out in the next period or so. Um, Maggie, last but not least, what are you currently reading in terms of a book, and is there a book that you always recommend to others, and why is that? The reason I ask this is because I just one of my personal kind of I don't want to say hobbies, but I always gift books to a lot of my friends. That's something that I've enjoyed, and it's just I always love to have a conversation around that.
There's one book we use a lot at Field Venture Capital, and we read it, and it's give us a good perspective. It's called Exponential Organization by Salim Ismail. I don't know if you know that book, but the reason that I like the book is give me a lot of refreshing ideas. And one of the thing is, we invest in technology companies that know how to leverage the transformative technology to help the company scale. And in the book, they point out, certain factors that can help the company scale quickly. Like, for example, leverage asset or staff on demand. Let's talk about leverage asset for a second. If you compare, Airbnb and Hilton for it to grow to like, crazy valuation like today, it takes many, many years because they have to raise capital, they have to hire people, they have to build hotel. But with Airbnb, what do you have to do? You have a house. I'm going to sign you up on my, platform, and that's how I generate revenue. So if you draw it on the chart, you have the revenue grow exponentially, but you have your cost, the marginal cost is growing linearly, and that's how because we venture capitalists, we invest in company growing exponentially, and growing exponentially, the business model has to make sense from the beginning. And that's the only way for you to grow exponentially is to keep the cost low, but to, generate more revenue. So that's one of the concepts that they discuss in the book, and I really like it.
Oh wow, I love that. I'm gonna add that to a growing list of book recommendations that I have. In fact, I should probably start a book club here on the Ivy Podcast. But for our listeners, we'll make the title available in the episode show notes. Maggie, I can't thank you enough for your time today. It was a short but very insightful conversation. I personally learned quite a bit. We're gonna stay in touch. What I love doing with a lot of my guests is do another follow-up episode in about a year just to see how much have changed, how much have transpired. We're going to revisit the conversation from a year ago and see what actually we were able to predict, accurately.
Well, I would be sad if we only talk once a year. So I hope that the next time I will see you at the headquarters. And there's so much things moving part right now in Miami with people in town, and people want to grow the tech ecosystem, the tech community down here. So I would love for us to explore some kind of like opportunity to work together.
Absolutely. I would definitely would love to. I'm going to make that happen. Thanks so much.
All right, thank you.